Hi, I'm Ashutosh Gehlot. I'm a market strategist with the Edelweiss Professional Investor Research team. So, every month, the Government of India releases the trade data and the details of it. And thereon, we release a report on the same, providing analysis and insights. So, this month, I'm going to take you through some of the basics of the trade report. But before that, let's understand why is the trade data so important. Firstly, trade balance is part of the current account deficit of a country, and therefore it determines the external borrowing requirements of the country. And secondly, the currency of a country, in our case the Indian rupee, is also highly dependent on the trade balance. A situation of trade deficit would lead to the weakening of the Indian currency, which would make our products, the Indian products, attractive to foreign buyers. When it comes to India, we usually find ourselves in a situation of a trade deficit or a negative balance of trade, indicating that the country's imports exceed its exports. A trade deficit occurs when a country is unable to produce everything it needs, thereby becoming a net importer. In our case, petroleum products, electronic goods, and gold are the major import items. On the other hand, our exports, which consist of petroleum products, engineering goods, and other labor-intensive manufactured products, fail to catch up to the large quantum of imports. Since more than 20% of our imports consist of just oil and petroleum products, the crude oil price outlook has a major impact on our trade balance. This is the reason why we focus so much on the crude oil price outlook in our report. Owing to the importance of oil products, the trade deficit can be split into two parts: the oil trade deficit and the non-oil trade deficit. The oil trade deficit is impacted by the level of oil exports and oil imports. On the other hand, the non-oil exports gives us a gauge of the economic activity in the country and the demand for our exports globally. Lastly, the trade balance shows the position of the economy in the world. A situation of a high trade deficit indicates that we are buying more from the world than we are selling to them, implying that we owe to the rest of the world. Therefore, we need to keep our trade balance in check. Now that you have a basic idea about the trade balance and its key components, in the next video, we'll take an even more closer look into the trade reports, its key takeaways and implications. Thank you.